In this presentation, I'm going to talk about how Oracle Trader came about and why it works. Since the advent of the internet, we've basically been bombarded with information from just about every source imaginable. Stock information is everywhere. You're inundated with ads from online brokers, stock gurus, stock pickers, even a little mad money. But which one of these people are right? None of them, actually. Or all of them, depending on your point of view. Here's why. Because stock action is controlled by literally millions of traders from all over the world. Floor traders, day traders, even the entire exchange itself all contribute to the action of prices going up and down. Stock action occurs from the composite knowledge of all traders. In other words, it's a poll of all opinions. Here's a really simple example. This chart of Intel shows volume bars in the first several months of this chart. Notice that the blue volume bars are larger than the red ones. That indicates there's more buying interest than selling interest, and of course the stock rises. Now, right here we're showing a lot more selling interest all of a sudden, and there it gets very intense. And I want to show you what happens to this stock after that point. Right there is where we see the selling action increase. Look at the downslide. This was a 33% decline, which you could have foreseen. Now here's what's interesting. During that decline, the majority of stock analysts recommended a strong buy. This is crazy. You would have lost 33%. Well, so much for conventional information. So the way we developed Oracle is we analyzed thousands of stocks in years of historical data. The result that we found is that there are 5 major patterns in a stock chart. And that's trend, breakout, volume surge, change of moving average, and oversold condition. Now we'll cover these in some other demonstration, but for now, these are the important indicators of a stock. So what we do every day is we scan 1,700 charts, and what we do is we accumulate the value or the weight of each of these 5 indicators. Now we take an individual stock and we see if it has that indicator, yes or no. If it's a yes, we add a certain factor to the score for that stock. We call that the reliability factor. That means how reliable that indicator is for that stock. And we come up with a total score. In this case, in this example, that's 6.8. We do that with the next stock, the next stock, the next stock, all 1,700 stocks. And what you get is the result of that scoring. Every stock has a score, and the higher the score, the better chances of a near-term advance. That's the simple explanation of Oracle Trader.